Axiata Group, Telenor Asia and Digi.com have jointly announced the completion of the merger of Celcom Axiata and Digi's telco operations. Axiata and Telenor will hold equal ownership of 33.1% each in the newly merged entity named Celcom-Digi. In a joint statement, the parties said that on a pro forma basis for the financial year 2021, Celcom-Digi will serve an estimated 20 million customers with revenues of 13 billion ringgit and earnings before interest, tax, depreciation and amortization of around 5.8 billion ringgit. The company remains committed to the previously announced synergy target of 8 billion ringgit. Axiata Chairman Tan Sri Shahrial Ridza Ridwan said Celcom-Digi is strategically poised to invest in network expansion and support the growth of Malaysia's digital ecosystem. Meanwhile, Telenor Executive Vice President and Head of Asia, Jorgen C. Arends Rostrup said the Norwegian state-owned company is committed to being an active owner, bringing technology know-how, experience across international markets and global partnerships with industry giants to Celcom-Digi. Malaysian institutional investors such as the EPF, PNB and Corp are also shareholders of the new company. Axiata shares ended the day up 5.18% at RM3.25, bringing in a market capitalisation of 29.83 billion ringgit. Digi shares settled 3.09% higher at RM4, valuing the group at 31.1 billion ringgit. Petronas saw its third quarter FY22 net profit jump 88% year-on-year to a high of 30.8 billion ringgit on favourable prices of major products and positive impact of exchange rates. Revenue increased by 60.5% to 99.2 billion ringgit. Its president and group CEO Datuk Tengku Muhammad Taufik said in a statement that Petronas remains fully determined to strengthen its resilience and seize new opportunities by staying true to prudent financial management and firm capital discipline and investing responsibly to sustainably deliver profitable growth. As it pursues these efforts, he said Petronas remains grounded on discharging its responsibilities to its sole shareholder, the government, including the nurturing of a resilient local oil and gas services and equipment ecosystem and contributing to the well-being of the communities where it operates. On the industry outlook, it expects prices to remain volatile amid intensifying geopolitical and economic headwinds. In the face of the unprecedented global energy crisis, it will focus on delivering commercial and operational excellence and will continue to invest responsibly towards ensuring energy supply security while pursuing its growth strategy and net zero carbon emissions target by 2050. CIMB Group Holdings posted a net profit of 1.41 billion ringgit for the third quarter of FY22 versus a net loss of 100.59 million ringgit a year ago. Apart from stronger net interest income, it is worth noting that the banking group incurred a whopping 1.2 billion ringgit goodwill impairment triggered by the prolonged impact of COVID-19 in Thailand in the previous corresponding quarter that dragged the lender into the red. Its net interest income after modification loss grew 9.3% to 2.98 billion ringgit for the quarter under review. CIMB said it is confident that it remains firmly on track to exceed its targets for this financial year. Still, Group CEO Dato' Abdul Rahman Ahmad said the lender remains cautious for the year ahead, as management expects some tapering in loan demand given the rising interest rate environment and intensified competition for deposits in line with economic activity. He said the group will focus on sustaining its deposits franchise with strong emphasis on current account, saving account retention and building on loan growth judiciously as it focuses on managing credit risk. CIMB's share price dropped 0.34% to RM5.80 today, giving it a market capitalisation of 61.86 billion ringgit. Public Bank says its third quarter FY22 earnings rose 16.8% from a year earlier due to higher net interest income and lower loan impairment allowance. The group's net interest income was 16.5% higher at 338.1 million ringgit, partly attributable to loan growth achieved and the positive effect of overnight policy rate hikes. Meanwhile, its loan impairment allowance was 70.4% lower at 228.5 million ringgit, partially offset by 10.4% higher other operating expenses of 101.5 million ringgit. The lender said the lower loan impairment allowance was mainly on adequate preemptive allowance made in the prior years. Revenue rose by some 14% to 5.5 billion ringgit. The bank declared a second interim dividend of 4 cents per share for the quarter, payable on December 23rd. Its founder and chairman emeritus Tan Sri Teh Hong Piao said the bank will keep vigilant amid downside risks that remain owing to inflationary pressure, supply chain disruptions, global monetary tightening and geopolitical tensions. The group will continue to build business resilience by maintaining a healthy capital position, preserving asset quality, further strengthening its risk management capabilities, and upholding sound corporate governance practices. At the close, Public Bank settled 2.04% lower at 4.50 ringgit, valuing the lender at 87.35 billion ringgit. FGV Holdings booked a near 40% year-on-year fall in third quarter FY22 net profit, dragged down by losses incurred in its sugar-producing business. The group controls a 51% stake in MSM Malaysia Holdings. Earnings tumbled to 241.67 million ringgit, although revenue was up 16% to 6.18 billion ringgit on the back of higher palm oil prices. In a filing today, FGV said the sugar segment suffered an erosion in margin, mainly attributable to high input costs of raw sugar, freight and natural gas, and the weakening of the ringgit, despite the increase in overall average selling prices. Meanwhile, its plantation segment was affected by lower fresh fruit bunch production, an increase in manuring and labour costs as a result of the minimum wage hike. For the final quarter of 2022, FGV said palm oil supplies are expected to remain tight due to adverse weather in Malaysia as well as continued shortage of workers in the estate. As a result, crude palm oil prices are expected to average around 4,000 ringgit per tonne in the fourth quarter of FY22. It also expects the remainder of the year to remain challenging for its sugar business. FGV shares traded 3.57% lower at 1.35 ringgit at the close, valuing the group at about 4.93 billion ringgit.